Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the weekly recap for January 8th through January 12th. So we're going to be discussing the weekly changes in the three indexes. We're going to be taking a look at my weekly change as far as dividend payouts, my own portfolio change for the week, and the buys and sells, the trades that I initiated this week, whether they were sells or buys and whatnot. And then we're going to be jumping over and talking about real estate investment trust because that's something I've been looking at this week. And year to date, I've been tracking 3 real estate investment trusts from last year, and this could be a great buying opportunity. So I'm going to go ahead and share that with you guys, and then you guys can make a decision whether it'd be something interesting to kind of take a look at further. So let's go ahead and get into it. So S&P 500 up year to date 4.21%. That's amazing. With the average S&P 500 move for the year is 7-10%. We're already over, nearly half of 10%. So that's crazy right there. S&P 500 4 out of the 5 days this week with a 5-day change of 1.57%. So for the 5-year. So very nice start off to 2018. 2 very positive weeks. The Dow Jones up 4.39% year to date. Another great index to be tracking inside your portfolio. 3 out of the 5 days positive this week with a 5-day change of 2.01. So they're currently in second place for the year with the S&P right behind them. And then the NASDAQ up at 5.18% this year. And 5-day change, they were positive 4 out of the 5 days with a 5-day change of 1.74%. So these are all great indexes. I don't own any index or ETF that tracks the NASDAQ. I don't know if I would. I mean, I think it's a great index to track, but that's great right there. So over on my weekly recap and trading for January 8th through the 12th, I did go back a little bit on my portfolio, my between my cash managed account and my Roth IRA, I fell back 0.23% this week. So I've been started off very rough in 2018. My accounts have not done so well as far as my self-managed one. My 401k, it tracks the S&P 500, and then my thrift savings plans, it tracks the Dow Jones. So those are doing fine. It's just my self-managed ones. But again, my self-managed portfolio is mainly for dividend income and reinvestments for the long term. So over the long term, I believe 2018 will still be a great year for me. Weekly dividends this week, I was paid out by Pepsi, $27.37. Right behind with Reality Income at $14.45. This is in my non-retirement account. I transferred this money into my retirement account, and then Omni Group paid out $7.20. This is one that I had bought back in December as a swing trade and was holding on to. So already into the second week of the year. Total for this week was $49.02. So it's my second week of the year. Last week I was paid out $30.57. This week I was paid out $49.02. So I've started off 2018 making $79.59 so far. So that's very positive right there. My weekly trades that I initiated. So I didn't trade anything inside my non-retirement account. Inside my retirement account, I was down. I recovered the 3.3% loss that I had made on OMC. So if you look at my last week's one, I was down 3.36% on OMC on Friday of last week. This stock recovered very nicely this week, and I was able to sell it off for a profit of $8.40. And then they also paid me out that dividend of $7.20. So that was a total of $15.60. So not an amazing capital gain and dividend right there. Going for the long term, I'm kind of deciding if I don't think I'll take up swing trading. I really prefer just look at a stock, find a stock that I really like, make sure it has dividend growth potential for the future, it's recession proof, look at the fundamentals of the stock, do an analysis on it, and then buy and hold it for the long term and then reinvest those dividends. Because when I'm down in positions such as OMC where it looked like a great stock to swing trade, it could definitely recover. It did recover, but kind of holding my profits in that. I'm not looking to reinvest in that stock. I didn't want to buy more positions or average down on my positions. So it was kind of like a weird position I was in. So I took the capital gains, the dividends that I was paid out in my non-retirement account, and I used that to buy Kimberly-Clark, ticker symbol KMB. So I was able to buy 8 shares at $112.67. So this is a long-term hold. And here we can see that for the max year, we'll take a look at just the 5-year. I bought it at a 112.67, I believe. 112.67. And we can see here that it rarely hits that 110, 112. The last time it did this was back in 2016. Going into 2017, it was very slow growth during this time frame here, but it's at another great dip. If I can, I'll probably buy a little bit more positions in this one, but I'm looking at other real estate investment trusts inside my Roth IRA, and that's what we're going to be talking about right now. So taking a look at some real estate, I was taking a look, this article is back from December, and kind of reading back through how real estate investment trusts are supposed to be bouncing forward in 2018 with the new tax reform and 20% deduction in real estate investments and qualified dividends and such. The whole thing hasn't been lined out yet. I can't find really any good information on how tax reform will affect REITs and such. So I have been watching real estate investment trusts, REITs, and I've been tracking 3 of them for the last 2-3 months, looking for a good buying opportunity. I do own one of them, and we'll go ahead and talk about that here. So this website is called REIT.com. It's a great website if you're looking at just REIT indexes. So if you go over to REIT.com, go to REIT data, go to REIT indexes. Here you can check out the U.S. Global REIT Index data. So you can see across the board that they've been really negative this week. In year to date, if you looked up just about any ticker symbol that's a real estate investment trust, it would be down right now year to date. So I do have 3 real estate investment trusts to share with you guys today. Take these with a grain of salt. These are 3 that I've been tracking the last 3 months or so. I have one of them in my portfolio. Real estate have kind of gone down the last few weeks due to the tax reform. They're still trying to figure out where exactly real estate investment trusts fit in there. There was a snippet how they would get tax deduction of 20%. They've also changed the way taxes work on property and houses and rising rates. 2018 they're supposed to increase rates again by 3 or 4 times. 3 or 4 times sometime during the year. So as rates increase, these real estate investment trusts are less likely to buy properties. So let's go ahead and get into this. So we have ticker symbol WPC. This is the very first one I'll be sharing with you guys. This is one I've been tracking for the last few months. It's down right now year to date 5.73. The change for the week, it came, it flew down this week. Let's see, 5-day change. It is down 4.05% this week. And this one, it's a property management. Now this one's actually really nice with the long-term dividend growth, 17 years, a pretty high payout ratio, but that's pretty normal for real estate investment trusts. They have to pay out over a certain percentage in order not to get taxed very heavy. You can read about that. Just look up like real estate investment trusts, why are their payout ratio so high. It'll tell you. Dividend yield 6.22, payout ratio $4.02. This is a quarterly paying stock, and it's non-qualified. So I'd recommend you guys holding this inside like a Roth IRA or Roth 401. You can't hold it inside your Roth 401k, but your Roth IRA, you can specifically buy this one, and you would get paid out these very nice dividends every single quarter of. And frequencies quarterly. They're non-qualified, so you would get taxed at your regular income tax bracket unless you're sitting inside your Roth IRA. And look at this, they pay out $1 for each share per quarter, and they have special payouts. So this stock has special payouts. They did special payouts back in 2008, 2009. They did one in 2013. So great buy and hold stock for the long term. I don't have the chart data. We're actually going to look at the price data for the last, we'll say 5-10 years. So we'll do that here in just a second. Next ticker symbol is DLR. This is Digital Reality Trust. They buy properties, and they kind of let's see here. There's a whole snippet down here of what they do. So they own, acquire, develop, redevelop, and manage turnkey data centers and power-based buildings. So Very stable business. They've had dividend growth 13 years. Payout ratio 61%. Dividend yield 3.52. This is another quarterly paying stock. It's non-qualified, so again, you will pay your regular tax income tax bracket on it unless you hold it inside your Roth IRA. They are down as far as earnings growth this year. But let's see here, 5-day, not 5-year, 5-day change. They are down for the week 6.39%. So this one could be hitting its support, and it could start to trend sideways and then kind of build up. You can see over the year, this is one of the cheapest points you'd be able to buy this stock. And then over the last 5 years, the last opportunity was back sometime. Yeah, start of 2017 was the last time it had dipped right about this low, but normally it's on an upwards trend. And again, recession-proof stocks since 2005. They paid out during that recession. This one hasn't had any special payouts, but it does do very nice increases. You can see that nice, consistent dividend increases. And 2005 is when they began to pay dividends. So they've been paying out and increasing dividends the entire time that they've paid out dividends, and they do real estate investment. We've already covered what they did. They do the whole turnkey power centers and data centers and stuff. So I thought that was really interesting. The third REIT is Reality Income. This is known as the monthly paying stock for dividend holders. I know a lot of dividend investors that hold this stock. I hold it inside my portfolio. So 5-day change is down 4.51%. So this could be a good buying opportunity. It's currently trending sideways, so it could be, it's hit its support. It's kind of testing the waters. It might shoot up in the following weeks. Who really knows? But we can see here for the 1-year change, it doesn't really fall below this point over the year. You can see here it hits that support, kind of hangs out right around there, builds and trends sideways for a little bit. You can see that trending sideways before blowing up and going up into the 50, 50, 56, $58 range, and trends down a little bit and kind of picks back up. So this is good intervals to buy the stock. And you can see here over the 5-year, the last buying opportunity. These buying opportunities, they take place, and it usually hits right here in the support, kind of trends sideways for a bit before taking back up. This is the winner as far as dividend growth goes for Reality Real Estate Investment Trust. They've been having dividend growth for the last 22 years. Their payout ratio is 87%, dividend yield 4.84, annualized payout $2.55. I remember I hold this one inside of my non-retirement account, so this is all getting taxed at my regular income tax bracket, which I don't recommend. I want this one to kind of break even. That way I can sell it off and move it into my retirement account. That way all the dividends that I get paid out are 100% tax free. I just can't sell it at a loss in my non-retirement account and then buy it in my retirement account for 3 months. If I were to do that, I couldn't defer the loss then. If I did sell this at a loss, I would have to wait 3 months before buying it back in. Otherwise, I couldn't defer the loss there. So I'm not looking at doing that right now until it kind of gains back to where it was. I have no problem holding the stock for the long term. Again, this is a great stock. 22 years of dividend growth, payout every single month. Every single month, I get paid out $14.45, and they recently increased their dividend. So what else do we talk about? Here they pay out monthly. They're non-qualified, so again, you get taxed your regular income bracket unless you hold them inside your Roth IRA, which I 100% recommend. Look at that continued dividend growth, and they did like a stock split right there, 2 for 1. So very nice long-term buy and hold. So those are the 3 stocks that I wanted to share with you, the 3 real estate investment trusts. We have WPC, which was a property management. We have DLR, which is a real estate and real estate development group. They buy properties, redevelop them, fix them up turnkey, and then sell them off very nicely for a profit. And then we have our Reality Income, which is like it's a retail REIT, but it's a great REIT to hold for the long term. So those are it as far as the 3 I really wanted to share with you guys. We can see here just really quickly, I just want to show you the price to yield. The DLR, the price whoa, what's going on here? Go back to the original. So here we can see here that this stock, does very nicely over, during recessions. It does fall during the 2008 recession, but man, picked it right back up within 2 years. That could have been a great buying opportunity. I don't believe, yeah, they did pay out dividends. They've been paying out dividends for 2015. We can throw dividends in there. Look at that nice steady dividend, huge leaps forward and nice steady going sideways. WPC, same thing for them. Let's go back to 10 years here. Again, you have these special payouts here, special payout, special payout. And see here their price. They fall during 2008, but they did recover. Let's take a look at 2008 real quick. So here we can see 2008, they did fall. It took them a little bit longer to recover. They recovered and broke even right around 2012, 2013. But look at that explosion after. So very good stock there. It has been kind of trending sideways. It has these teacups. So it goes down, it comes back up, goes down, comes back up, goes down. So this one could trend down into the $60 range before trending back up and continuing to do a sort of teacup. And see here, let's bring it back. Actually, I want to show you the price to yield here over the 5 years. So for the last 5 years, there's been a couple buying opportunities where the yield exceeds the price. So back in 2016 was a good buying opportunity. 2017 was a good buying opportunity. Right now, the yield exceeds the price right now. So this could, as it teacups and bottoms out at the $58 range, $60, $58 range, wherever you're comfortable buying in at, you could buy it and pick it back up into the $70, $67 range. So could be a good buying opportunity there. Just kind of sharing that out with you guys. And then last we have a reality income. Again, yield over price right here. Good buying opportunity back during this whole time frame where I bought my house in 2013. It's super cheap compared to where prices are right now. So yield over price was amazing back then. Yield over price, and then price exceeded yield for the last few years. And now you're getting a good buying opportunity now for this REIT. And again, taking a look at that dividend, let's just pull everything off and look at this dividend, that nice dividend increase from way back in the 2000s. So that's what I like to see. Special payouts right here and huge increases and nice steady increases there. So those are 3 great real estate investment trusts that I wanted to share with you guys. Let me know what you think in the comments below. Are you looking at real estate investment trust? Do you hold any inside your cash managed account or Roth accounts and such? So I hope you have enjoyed the video. If you are brand new to my channel or a recurring viewer, hit the subscribe button below. It's 100% free. It really helps me out and I appreciate it. If you found this video entertaining and you liked the content, hit the like button below. Leave me a comment if you have any questions. I always respond to all the comments and questions. I am not a licensed investment advisor, and today's video was for entertainment and fun. I did like to kind of talk about the changes in the market, my portfolio, some of the REITs that I was taking a look at. They're dipping down. I think they're great buying opportunities, but always talk with a financial advisor if that's what you're into. And again, thanks for tuning in, and I will see you next time. Have a great day. Bye.